day. Ira Epstein with your financial market wrap-up for this Monday, February 24th, 2020, and we're getting on to 4:40 in the afternoon. First announcement, I am not going to be in the office tomorrow. I'm finally getting my eye taken care of, and so I'll be out of commission for tomorrow. I intend on being back on Wednesday afternoon to put out these videos. Now, we do have a snowstorm headed to Chicago. If you watch national news, somewhere between, they're right now estimating 6 to 12 inches. Believe me, if it's 12 inches, businesses will have a hard time opening. I don't care where you are. A foot of snow is an awful lot. But living in the city itself and right downtown, we generally don't get that. If it happens, I'll let you know. All right, so where are we? If you think about it, each Friday's the gamble in these markets now. Coronavirus, COVID-19 is what it's called. Do we get more or worse of it? Now in China, it looked to me over the weekend like the numbers were actually controlled and less of it. In Italy, it took off, where they've, outside of Milan, 10 towns have gone into quarantine. A train was turned back originally from the border, crossing in from the Alps to Austria. Finally, it made it through, but you get the message, be it South Korea, be it Japan, be it now Iran. The virus keeps spreading. It hasn't hit Latin America, South America, the other end of the world, if you will, so far. We'll see if it does or doesn't. You know, if people travel, that's the issue. And if they don't know if they're a carrier, it's even worse. But the stock market, a huge down day, not in percentage points. In points, there's a big difference between the two. Now, I was down on the floor today doing some TV for Bloomberg Canada, BNN TV, which I really like doing. It's a longer interview, you get to say more. And I called it Shopping Day. And the reason was, I think today you were getting traders that had a list of markets they'd want to buy, be it a 5%, 10% correction. They'll start picking up some of those individual stocks. That is not what I think you do in futures. In the futures, you don't try to catch this knife that's coming down with this monstrous leverage. No. It's too slippery. Whatever you do, you do. While the metal markets closed good and higher, the last quotes of the day were nowhere near these. They were lower than this. Stocks were right in at the very end. The dollar was down most of the day, and it was able to recover just going into the close. When we look at the S&P on a close basis on a week, I'm going to look for support first at 3218. Now, there are other numbers that you have to look for, and we're going to go to the daily charts and look at them. Yet, first thing, you have a gap in the chart. Does it get filled, or do you get another gap under it, breakaway, runaway gap to the downside? Tonight will tell us a lot about that. In looking at the marketplace, how deep is this? Well, if we come to the chart, we see that without today, you had a pattern coming in of higher lows and still higher highs. That's what it would have been. If you take out right here, 3303.50, you break the pattern. And now you've got a lower low, higher high pattern. So the number that I think spooked people out was not this part of the day. It's when this was taken out. That's my own opinion. Then I looked at where the moving averages were. So let's take today off and come back here. Again, there's validity to 3303.50. Why? Because that puts you under the 18-day average as well. Okay, now let's look at moving averages. Where is the bigger support? The 100-day average is one of the levels, 3163, and I bet that the other number you'll hear, be it on CNBC, Fox, moving average people, will all talk eventually about the 200-day moving average of closes. That does not mean the market's going there. That means they'll be talking that is the big number that they're looking at. Any way you go about it, this is a market that's had a correction from 33.97 down to today's low of 32.13. All in all, in the scope of things, it's not that monstrous. That's my point. Where did the market find its first footing? I want you to look at the lower Bollinger Band. How often do I tell you the first challenge of a Bollinger Band is where I personally think pros take some money off the table, be it to the upside, be it to the downside. You don't change your game plan. Next, I look at momentum. You lost the embedded reading when? not today. You lost it on Friday, but you'd already gotten down for all purposes to the 18-day average. We knew momentum was lost unless you got it back on Sunday, and you didn't even come close to it. You gapped lower and you kept going. So let's understand that part. When I come into the NASDAQ, where do you think I would tell you if you were on the phone with me, Ira, where do you think first support might show up? Oh, hi, Bob. I think it's going to be around the lower Bollinger Band. Momentum down. You're out of a trend. You broke the pattern on Friday of consistent in this pattern for quite a while. Higher lows, higher highs. The game changed on a dime. Why the market on this particular day of Thursday turned out to be the high, why people changed their sentiment, got to blame it on the virus. What else happened? Nothing really. And today you're getting the rest of the reaction down here. In the Dow, I'm going to repeat what I say. The first challenge of a Bollinger Band, ideally with a 100-day average, is where I look for support to come in. Well, I feel good about saying that statement. If you fall, the 200-day is 27,203. It's another 700 points away. That's a big correction. It's going to be about another 3.5–4% if you think about it. It could happen. I don't know what the news of the day is going to be, but I do think that sophisticated pros were taking money off the table against the first challenge of that combination of a 100-day and the Bollinger Band. I think the same thing in the Russell. You hit it, and I think that that's where the support comes in. Support is not a trend change, but it is support. That might lead to a Tuesday bounce, and we'll see what the markets do. The VIX, nah. I don't think the pros did anything, and I think they were too smart for that. You got up here, but you got to go through a Monday morning COVID. You don't know what it's going to do. I think the pros on this game that they like of selling the upper Bollinger Band when it gets there to the calls or the puts down here. COVID changed things. Come tomorrow, nothing surprises me because that gets out of the way very quickly. There's a gap in this chart. Let's see if the market tries to fill it. So then we get to the bonds and we get to the Fed. And as a chartist, I see a breakout to the upside, but I also see a market that's now had how many days over the upper Bollinger Band. This day it was under it, over it, day 1, 2. So it's not extensive that it's over it. I realize people are panicked. They're pushing bonds down to lows, maybe a 100-year low coming in here. It might go down in some of the other markets to crazy or even longer in duration of time, 200-year lows. When America was founded, who knows? But you're getting to that point. Mortgages probably coming down. Try to get one will be the hard part. The rate will be down. The Fed doesn't have to cut. You do understand that. The market's done it for the Fed. With the Fed, and I listened to a lot of comments on this, come into the markets now to rescue them, and I'd ask why. Market's already priced in this. All the Fed would be doing is chasing the market. When a Fed pulls the trigger, it's because you're ideally in the right timing for it to have an impact. You can't control this COVID-19 until you get to a point where you're beyond or at the peak, one of the two. And then on the downside, you can spur the market on. I think a lot of banks are caught waiting to see what that is. That's my own opinion. What is the market pricing in? I think there's an 80% probability on the Fed fund futures of an interest rate cut before July. So that just gives you an idea as to what this type of panic does. In the 10-year notes, two days over, do I ever teach anyone to buy over an upper band or sell under a lower one? If I do, slap me across the face. It's not what I teach in any manner. In the dollar index, warning sign here. You closed and lost the embedded reading. Yes, it can be gained back immediately the next day, but that's what it's going to require. This is the first sign that maybe the market on that rally got way ahead of itself and it's ready for price and the 18-day average to come together. I would be surprised if pros didn't look at this and decide maybe they're going to see tonight, if they don't like what they see and it loses more steam, to take some money off the table. That does not mean they're turning bearish. In the euro, I'm watching this. It's getting close to trying to turn up. It hasn't done it. The bears are still in control of this market. They're selling. I still think the rallies in the market at this point. Lose the embedded reading, I'll have a whole different opinion of it. In the end, you lost the embedded reading. I wouldn't be surprised if price and the 18-day average now make that run at each other. I'd be wrong in my thinking if it re-embeds tomorrow, and I won't be here to discuss it with you. In Bitcoin, battleground is the 18-day average of closes, but today was a bad close for this market. It finished under the 18-day average. It had an outside day down. I should have taken this arrow and pointed it here. Now you've got lower highs, lower lows, momentum down, bias down. To stop this decline over the next 48 hours, you've got to take out today's high, which was 10,075. If not, it could be the price wants to head wherever that Bollinger Band is to look for further support. The resistance is going to be, I think, the 18-day average of closes. And the differential between Brent and WTI came crashing in today. If we take a look, this differential had gotten up to as high as 563. I'm having trouble saying that. But 563, the market is pulling back to 512. Goes down to 487 now. So this market's given up about 80 cents. Not enough for me to say it's anything yet important, but I am noticing this whole area here was a problem. Now, why would Brent close in with WTI unless there's potential demand coming for the Brent? That's my point. One way or the other, the two are coming, or WTI seeing demand come in. In any case, the 18-day average is what you pulled back to. And if we take a look at the Brent, you went up, just missed hitting this super powerful resistance of 60.39, 60.37, the 100-day and the upper Bollinger Band. Doesn't that remind you what we just saw in the stock indices? And now the market starts pulling back, gets right to the 18-day average. It never did embed, it just got overbought. In WTI, come on, first time you hit that upper band, that's what I teach. I think the pros took money off the table, and you've fallen back. For the high of that, there was 54.66. You're back down today to as low as 50.45. So I don't think they did bad if they did that. And where are you holding? In the neighborhood of the 18-day average. Gasoline, same thing. You get up to, I think, this combination of the 100-day and the upper Bollinger Band. That's an awful lot to overcome. The market did it one day, but I've been there when it looks like it's not going to do it. And then all of a sudden, you got to watch the momentum here. Turns back on you, and you're right back to that 18-day average of close. And in the nat gas, was this too high? Well, the first challenge of the Bollinger Band, you were a hero again. You know, there's different ways to play that. You have to come out of all your positions. You take some off. I'll let you figure that out. I teach it in my charting course, and I work with it from there. And I tell my subscribers what I think. Pivot points. I think tomorrow's going to be a day where you watch these. I won't be here, unfortunately, but after a big day like today, the follow-through up or down, often traders start looking intraday for different tools. One of the popular tools, I can't tell you everybody uses it, it's popular, it's been around for a long time too, is called a pivot point. And there are services that publish them, but you don't need to buy those. Your own charting software most likely does them. The question is, do you know how to use them? So we put together a 3-part video that teaches you the formula. Your charting service will do it, but it's nice to know how they work, how to plot them, the colors I use, and how I go about doing it. Your service probably does this. And then how I utilize momentum, the slow stochastic with it, which they're not going to teach you. You got to come to us for that. So how do you get this? Well, it's free. Just go to our website at www.iraepstein.com. Look under our free offers. Take a look. We'll send you the links to the videos. Right up here, you can click. You'll get to there as well. Remember, I won't be here tomorrow. You won't get a morning subscriber video out of me. I know it already on Wednesday morning. I intend, barring a big snowstorm in Chicago, of being in the office Wednesday and back to work. I'm Ira Epstein. You have a good day.